Thank you so much to Michael Froman for leading that really interesting panel. Really interesting. Something that's just been just hitting me constantly throughout all of these sessions today is third world debt. I think, it's something we need to deal with. If we're talking about global inclusive growth, if we're going to move on, if we're going to progress, especially listening to that panel, we have to find a way to help third world deal with this debt because they're paying too much of a heavy price with this burden. It's the only way our world is going to progress. Now, I know many of you in the audience think about sustainability in your business and investments. Here to lead us through the next discussion on this is Marla Blow, president of the Skoll Foundation. So, Marla, welcome to the stage. Lovely jacket. Lovely jacket. Good.
Hello. Such a pleasure to be here, and I am excited for this conversation, for us to spend a little bit of time just talking about impact investing. We have Greg and Monica here that are going to share a bit about their approach to impact investing, what that entails, how they think about the challenges and the opportunities that that represents. As a foundation lead, we sit on a large corpus of assets, and we think a lot about how they are invested in ways that help us have as big an impact as possible. So we're here to hear from two of the leading experts that are actively engaged in this area. So Monica, why don't we start with you and just bring you into the conversation here. Tell us a little bit about some of what you've discussed on building an ecosystem, right? What it means to establish and foster trust in a community in the interest of driving impact through your investing.
Thanks, Marla. It's great to be here, and a quick intro on Quona, which I think explains the answer to ecosystem. Quona is a venture firm focused on fintech for inclusion in emerging markets. It's all that we do, 800 million assets under management, 4 funds, and the reason why we've been able to get there is because of an ecosystem approach. One of our founding LPs and sponsor initially was Acción International, itself a multi-purpose organization that's focused on financial inclusion. It is a nonprofit, but actually raises impact funds. And again, it's mobilizing the private sector while understanding that there's an important role for the philanthropic community. And impact investing sits in the middle, this idea of really understanding and leveraging learnings around what drives social change, but knowing that the capital we need to mobilize has very specific rules of the game. And so to be performance-driven and really deliver a risk-adjusted return required us to play a role and really leverage other parts of our ecosystem. For example, our LP base is a third development finance institutions. So I think very fitting the panel that was just speaking about and the role that they play as long-standing supporters of emerging markets, understanding macro infrastructure. So they played an important role and continue to. But our LPs that come back actually are private sector banks, endowments, universities, and they both have been anchors since our initial fund. And they also play a credibility game. So it really helped us propel to say we are mainstream in some ways, even though what we were doing was very frontier. Mm-hmm. The last thing I'll just say is that another piece of the ecosystem is locally. So of the 30 people that work at Quona, all of our investment staff, except I'm the only one who is not based in market. And that's also really important because the ecosystem has to work locally. To have a thriving venture ecosystem, you need other co-investors, you need great accelerators, folks that are breeding and cultivating the next cohort of entrepreneurs, and then supporting them on their scale journey.
Absolutely, absolutely. That's this notion of proximity, right? When you can't necessarily be every single place around the world all the time, establishes a big component of the ecosystem. Thank you for that. Greg, let's bring you in. Why don't you introduce yourself as well and share a little bit about you expressed a perspective about the public sector when we were prepping for this, and you described the public sector as being maxed out, and the private sector, paradoxically, or on the other hand, is underleveraged and has been playing too small a role. So maybe introduce yourself, share a bit about what you mean by maxed out in the public sector and funds availability there, and what you see as the opportunities for the private sector.
Yeah, thank you, Marla. First of all, let me thank you for having us, and thank you for waiting for us. I know it's been an incredible program today. I'm Greg Schell. I lead the Horizon Inclusive Growth Fund at Goldman Sachs. It's $1 billion private equity strategy to invest in the 3 impact sectors that we think are most opportune. They're education, healthcare, I'm noticing my mic is going crazy, and financial services. And look, when I think about the enormity of the challenges that we face, I just think that you have to have an all-of-the-above approach, Marla. Can you hear me now?
Yeah.
Hello?
You might have to project a little bit.
I'll keep going. You have to have an all-of-the-above approach, and you don't get to the places that we want to get to in terms of solutions without the private sector. I think the enormity of the required capital is one piece. I think one of the key learnings from the last panel is if the cheese is over here, the mouse will somehow follow, Marla. So there is something about the power of incentive, about the profit motive, about the convening power of the private sector. Thank you. But there's also something else that I think is important there, is that's where the greatest amount of dogma needs to be undone. That's where the proof points are probably most valuable. That's where the amount of convincing has been least, potentially effective, and it's necessary to win the battle there, I believe. And so some of the challenges that we want to go after, whether it's things like, the effects of climate, or it's related to, things like more inclusive, approaches to healthcare, whatever it is, there is no doubt that the multiplier effect from the solutions being addressed effectively really do not cause us to just live in a better, safer, more resilient world, but it actually ensures that we'll have a faster growing and larger economy. And I think it's repeatedly the case that the friction points and the things that really serve as constraints for people to play the role in the broader economy that they might otherwise are underestimated vastly. And I think the solution's more valuable. So the private sector has maybe an underestimated role.
Okay. All right, we'll come back to that. And speaking of coming back, actually, Monica, I want to pick up on a theme you just touched on in your opening remarks. You talked about development financial institutions and the role that they play. And you've talked a little bit about this and would love to draw you out on that a little bit. Can you talk a bit about the importance of DFIs, how you've engaged with them, and what role you think they can play in this impact investing arena?
Yeah, and I'll do so, but I think Greg just made a great point about the public sector versus private sector. So these development finance institutions are funded by public tax money. And so they have played the role of really the sort of the additionality, the first loss. They usually are part of the first close. They are on the frontier investing in markets before they become very popular commercial. They're really trying to demonstrate that there is a private sector opportunity maybe before it's been fully discovered. And so they have historically, as part of our funds, been about a third. And we've actually kept it at a third for the other point that Greg made, which is we really want to crowd in the private sector. We want to show them and actually also hold ourselves to the standards of what a private institutional investor would require in terms of what does performance mean, what does success mean, and also they play a critical role on the other steps of that ecosystem development, downstream capital, lending, you mentioned. So there's a lot of roles that the private sector plays. The development finance institutions have, in addition to being first adopters, early adopters, what I've really appreciated about them is that they also have been consistent friends. So in the last 10 years, which is how old Quona is, there have definitely been kind of peaks and troughs in how popular emerging markets are. And they've been very steady friends, and that's been important. I would just say, and when you said kind of overstretched, I think because the private sector has been absent, they've kind of bled into areas where I don't think is necessarily their strengths. So I think it's really important that people really define what's your swim lane, where can you really leverage your strength, and have the multiplier effect that way.
Absolutely, I really like that, and I think there's an interesting analog there, Monica, on what philanthropy can do as well, right? Where we have the leverage and the opportunity to de-risk ideas and to demonstrate the viability in places where it ultimately has been hard for capital to get comfortable, and where that's a risk that we can bear differentially, that other kinds of capital needs to see someone else take that first pledge. So it's one of the ways that I think about leadership in the philanthropic space is about using the capital to do more than make grants, but also to be a part of the capital stack and enable capital to follow behind us. I think that's a critically important one. I'm keeping an eye on time, but Greg, sophistication in measuring and being able to report and manage impact and be able to tell that story is a critical component of impact investing. And I'm curious about what you've done to implement that and what that looks like for how you navigate at Goldman Sachs.
Yeah, I'd make the point that this, we've just launched our fund. We just have completed our second deal, so we're early in this process, Marla. But this is my third time doing this, and I think one of the most interesting, points of success that I've been fortunate to have in the past is really getting it right when it comes to management and measurement. I think I've been maybe surprised at the level of sophistication and where it's lacking, especially in the lower middle market, where it'd be easy to assume that companies had reams of data and lots of backing for why they make capital allocation decisions. And that's a place where investors can add a ton of value, by allowing for effective data capture, a real measurement canon that's robust, transparent, repeatable, and really give companies more reason for deeper convictions in their actions. Everything from how they and where they hire, where they invest, the kinds of projects they take on, how they engage their customers, on what basis they can be effective competitors. It all really does come back to management and measurement. It all comes back to your ability to understand why you've done something, why you might do it again. It's critically important to understand what to avoid. When I look at private equity in particular, but this is true across growth equity, across the venture space, I would observe that the value-added capability that investors contribute often has that as a gaping hole. And so in many ways, the impact ecosystem and investors who think like we might really have an opportunity to lead the entirety of the investing field into the future. Not because we just want to add a reporting capability, and really deliver something almost as if it was an act of compliance to our limited partners, but really more to delve deeply into operations and offer a capability that companies get to have and hold. And I think on that basis, able to better outcompete their contemporaries in the field. And I think that's why we do it.
I love that. And I love the idea of baking that in from the beginning, right? Yep. There's no need to come in later and try to retrofit or make the data match, but to build that in from the beginning sets you up to be able to deliver on that very accurately. So we're running low on time, but I do want to elicit a couple of stories from each of you, so we'll keep them brief. But let's talk a little bit about failure, right? And what you've learned, right? And failure being a critical component of accomplishing anything. And Greg, let's start with you, and then we'll give Monica the final word. But tell us a little bit about on your journey through impact investing, into and through impact investing, what you've learned learned the hard way or learned through failure.
Marla, investing is a humbling business. You're wrong a lot.
Tell me about it.
And when you are right, you just hope you're right bigger than when you're wrong. But I would talk about 2 points of failure. One is a failure of imagination. I think oftentimes when you model out companies, you have some really, basic, understandings or, ideas about what the future might hold. And almost always, that you're going to be wrong, but you think you're wrong on the edges. You're almost, wrong by half a lot of the time. Either something was better than you thought it could be, and you were timid in how you thought about the future. And then, of course, our natural bias toward being optimistic often exposes you that something went way wrong. So the fan of potential outcomes ends up being dramatically wider. That's a mistake of my lack of imagination about what the future might hold. I make that mistake sometimes. I think the other thing that I probably do, and this is more of a people challenge, is really assume alignment when there is none. That I have a certain vision and a company in my mind has an ideal opportunity to go after a future, but that's not what they see. It's not what they might want for themselves. They might not have conviction in it. They might not approach it with the level of seriousness of purpose that one needs to drive through that opportunity. Insisting that someone is truly aligned with you, where there's deep, clarity on the joint vision together and what that journey is going to look like, and really trying to be clear about what might happen along the way. When you don't have that kind of conversation up front, and you think you can get intoxicated by deal math and what's in front of you on paper, but life is much more messy than you imagine, and most of it is because you're dealing with people in the end.
Absolutely.
Yeah.
Yep. Monica, quick share from your perspective.
Yeah, I'll just build on that. I think for mine, it was kind of the failure of over-hoping. And I think it happens with both companies and with people. So, and really what the specific lesson is, sometimes you just have to cut the cord sooner. I think we are very much a type of investor that, is there, sort of, we usually are the last person standing. And while everyone's walked away, and I think there's a good part of that. You want to be reliable, especially in markets where there's not the infrastructure or support. But I think sometimes we need to walk away sooner.
Just have to say goodbye, as we will at this moment. Well said. Thank you, Monica. Thank you all. Pleasure to be here.